Everyone, welcome to our Q&A session. As always, I do want to go over a few housekeeping items as we just wait for a few more people to join us here before we start. I do want to make sure that you all can see myself and Brett here and that you can also hear me okay. So if there's any issues with that, please let us know in our live stream chat so that I am aware of that. Additionally, this is a Q&A session, so if there are questions that come up at any time during the session, please go ahead and type them up in the live stream chat if they weren't already pre-submitted. But once again, welcome and thank you for joining our Solo 401k and Self-Directed IRA live Q&A session. I'm Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today I am here with Brett. He's our consultant and he'll be answering all of the questions. And I want to just quickly introduce him. Brett is a solo 401k and self-directed IRA consultant here at Sense Financial, and he has a professional journey spanning over 18 years in real estate investing. Brett is also a licensed California real estate agent, and his passion lies in empowering people to attain financial independence, affording them the possibility of an early retirement. Thank you for joining us, Brett, today, and for taking the time to answer all the questions.
Absolutely. Thank you for your hard work and hosting this and everything else. Look forward to answering some good questions here today. And as Natalie said, we do have some pre-submitted questions that we'll get through, but also if you have any, be sure to type them into the chat and we will do our best to circle back around. If we do run out of time, then we'll reach out offline to get those questions answered. All right.
Yeah,
So
okay.
whenever we're ready, let's roll.
Yeah, jump right in. First question here is from Paige, and she's asking, how do I take a loan from my solo 401k?
Well, Paige, good question. And oftentimes people do come to us because of the participant loan option. So it's a common question for sure. Inside of our client portal, which we do have for our solo 401k clients, under the maintenance tab, we have a participant loan link that you can click on. And that will walk you through the step-by-step instructions on how to execute the participant loan. You are the plan administrator, but you're also the borrower. So you will not only complete the loan application, but you will also sign on the dotted line approving the loan, right? Because you wear both hats when it comes to the 401k. And so follow those instructions. They are fairly self-explanatory, but essentially you'll fill out that application. You will create an amortization schedule, can be made via quarterly payments or monthly payments, and so you'll set it up accordingly. There's a calculator you can use to figure out what the payments would look like. Prime interest rate plus 1% is what it needs to be. And then to execute it, just simply sign the document, keep it on file, and then transfer the money from the solo 401k, which is probably going to be in a checking account of some sort, whether it's at Solera or Schwab or something like that. Just transfer the funds that you borrowed from the plan from that checking account owned by the solo 401k to your own personal account. And now it's your money to do pretty much whatever you want. Just make sure you stay on top of those payments and don't get behind, so there's no penalties, or worst case scenario, the outstanding balance would become a distribution. So that is how you execute the loan.
All right, a question here from Sony. I would like more information on Form 5500 EZ.
Yeah, Sonny, thanks for the question. If I were on the phone with you and we had a back and forth, I would say, what are you looking for specifically? Because that is somewhat of a broad statement, but let me answer it like this. The 5500 needs to be filled out if you have at least $250,000 of total plan assets, total plan value in the solo 401k. All right, this is the equivalent of the IRA 5498. It's not a taxable form, it's just a valuation notice that you as the plan administrator will fill out, file with the IRS, and keep on file for your records. And so again, referencing our client portal, we do have the Form 5500 EZ instructions underneath the maintenance tab. And those are also line by line instructions about how to fill out that form and and how to file it. So there is a IRS run website called efast.dol.gov, Department of Labor, and it's free. Just create an account on there, and then you can upload it and file it through that. So that's how you'll get the 5500 filed. But again, just go to the client portal under maintenance, form 5500 instructions, and you'll find those instructions about how to complete it and how to file it. It is due the end of the 7th month after the plan year ends. And most solo 401k plan years end on December 31st, like 99.9% of them. And so the 5500 is typically due at the end of July. And we don't let our clients forget about that. Next
Okay,
question, please.
question from Mario. I'm the administrator of my solo 401k plan. Why do I need a custodian?
Mario, you don't. Next question. Just kidding. You don't need a custodian. None of our solo 401k plans, they all have checkbook control, and there is no custodian requirement for a solo 401k. Therefore, there is no custodian. You, Mario, assuming you have a solo 401k, are the plan administrator, as I mentioned a few minutes ago, and we don't need a custodian. Now, some solo 401ks will have a custodian, especially if you set it up with Fidelity, Vanguard, your financial planner, somewhere that doesn't create a quote unquote checkbook control style solo 401k, there will be a custodian. But you don't have to have one. And if you're one of our clients, then you don't have one.
Okay, a few questions here from Terry. First one is what are the fees for holding a self-directed IRA with your firm?
Yeah, Terry, good question. Well, so it kind of depends. Okay, first of all, our services, and just to be clear, we specialize in two products, the checkbook IRA and the solo 401k, and that's it. And so it ranges in price from about $800 up to $2,000. So that's the establishment fee. And so it really depends on the situation and what type of product we set up and the nuances for the setup. But straightforward wise, $800 to $2,000 is the range. And then our annual fee is a flat $250, which starts in year number 2, and that's for all plans.
Okay, second question from Terry. Do you accept ESA accounts?
Well, Terry, we don't set up ESAs, as you probably figured out from my previous answer, educational savings account. And I'm not sure what you mean by the word accept, but ESAs can't be rolled into a retirement plan. That's for education purposes. In some cases, you can switch the beneficiary of the funds. Like if one child decides not to go to college, you can switch it to another child. This is not our specialty. We don't set these up. So I just have some general knowledge about ESAs. I believe you can self-direct an ESA, but we do not set those up. And again, they can't go from ESA funds to a qualified retirement account of any sort. So the only kind of workaround to get them out of the ESA and into a retirement plan would be somehow cashing out some of the funds or all of the funds in the ESA and then making a contribution to an IRA, which is kind of a workaround. I mean, you still have to have earned income to contribute to an IRA, but the contribution funds to an IRA doesn't really matter where the actual dollars come from. So that would be the only workaround I can think of.
And last question here, how easy it is to transfer from another custodian?
Well, again, Terry, thank you for the question. It depends on what you mean by transfer and from another custodian. Are we talking about an existing? If you're here today, please feel free to type in some clarification in the chat. Are we talking about transferring a self-directed account to a plan that we create for you, or are you talking about just like a regular IRA at Fidelity and turning that into a self-directed IRA. So there's some nuance here that I don't have insight on to answer the question, but I wouldn't say use the word difficult generally speaking, but if we're talking about alternative assets in a plan with a custodian, and then we have to transfer those to a new custodian, so it's a self-directed to a self-directed, depending on what those assets are, there's going to be some work involved in retitling those assets. If we're going from no checkbook control to checkbook control, for example, a special purpose LLC would need to be created. So all the assets would now go from wherever they're owned or held now into that LLC. And so there's going to be some work involved in that. But if it's a straight up, like we do 95% of the time, cash from a plan at Vanguard, Fidelity, somebody's 401k plan, whatever it is, to a self-directed custodian, we do that all the time. So that's not, I wouldn't call it difficult. So typically for an IRA, it takes about 3 to 4 weeks, and the solo 401k is about 1 to 2 weeks. So just to give you an idea of the timeline, not counting the alternative assets I was just referring to. So again, Terry, if you're here, type in some questions or some clarification. I'd love to address it in more detail if possible.
All right, next question is from Robert. Can my wife purchase an investment property as a rental home that she could move into at a later point with an inherited IRA that will be rolled over soon? She retires in about 5 to 10 years.
Robert, great question. What a blessing to inherit an IRA from somebody. Does have a liquidation requirement in 10 years from the time it's inherited. She retires. Not sure that's really relevant to the conversation that I can think of right now, but she could eventually move into it, sure. It doesn't really matter that it's inherited other than it has that 10-year liquidation. So if she's going to buy a piece of real estate, the entire IRA is going to have to be liquidated in that, by year 10, right? That includes the asset. So either you sell the asset and then liquidate it in the form of a cash distribution, or you keep the asset in the plan and liquidate it in the form of distributing the asset to yourself. So if she wants to keep this real estate personally, then sure, she can distribute the asset to herself, no problem. So it just depends. Is it Roth or traditional? Obviously, the taxes are going to be kind of a different conversation there. But yeah, inherited or not, this is a possibility for sure.
Okay, we have a couple questions here from David. First one is, I'm looking to purchase a restaurant with my self-directed 401k funds. What business entity type can a self-directed 401k invest in?
Oh, great question. Yeah. So, I mean, you can invest. This is two different things here. What can my 401k invest in? And you're making the comment that you're looking to purchase a restaurant with your 401k funds. Well, first of all, 401ks and IRAs are designed to be invested passively. When you use the plan to invest in an active business, or rather own the active business, then the IRS is okay with that. But to level the playing field between Mr. and Mrs. Smith doing that and running that restaurant with their personal funds and paying all the taxes associated with that versus you doing the same thing with your retirement money, and if this rule weren't in place, otherwise not having to pay the same taxes that Mr. and Mrs. Smith pay, to level the playing field, there's a tax called an unrelated business income tax, UBIT for short, and the funds, the proceeds from that restaurant are going to be subject to that tax, which scales up to 37%. So it can be pretty hefty. You still might want to do that with your 401k. I don't know. That's up to you. I would probably not, just personally. That's just my own opinion, but it's up to you. There's going to be some restrictions. You can't work there unless you're, a real small minority your 401k is a minority interest in that restaurant, you're better off just being a private lender to a restaurant owner and then having your 401k receive proceeds because of that loan, but not actually own the restaurant, because then there's no UBIT tax on that. But it is up to you. You could set up a another C corporation to kind of lower the tax rate from 37 down to the corporate tax rate of 21. This is not something we do at Sense Financial. That's something you'd have to figure out on your own with an attorney or a tax advisor of some sort. But that would be possibly the way to do it if you are going to definitely do it. And then the, what business entity type can a self-directed 401k invest into? It just kind of depends on what you mean invest into. Now, if it's going to be an owner, it's probably going to be a multi-member LLC, which is a partnership at the end of the day, right? So that's probably what you're going to end up doing. But I'm not able to give you this type of advice on how to do it. But those all work. The only thing it can't invest into is an S corp, but that's because you have to be an actual human being to be part of an S corp. So, but all that is allowed. And then, I think I'll leave it at that. If you're here, feel free to type in some clarification in the chat, but that's it.
The second question from David is, I've made a few distributions to myself from my self-directed 401k funds this year. How do I report these distributions to the IRS?
Well, David, you will fill out Form 1099, and depending on let me back up a little bit. When it comes to being the plan administrator of your plan, you're responsible for the basic bookkeeping of the plan, right? We recommend just a simple spreadsheet that keeps track of the transactions, and then just notate when they happen and what they are. But if you're going to take a distribution, we have a distribution form that you can fill out. This is for your records only on our client portal. And you'll check the box of what type of funds you're distributing to yourself, right? Roth, traditional, and then the amount, of course. And that's pretty much the most important information. Obviously, the date, the plan name, all that's in there. But this is just for your records. You don't have to turn this in to anybody. And then you will need to issue Form 1099 from the plan to yourself, which, of course, you'll turn into your tax preparer so that that income can be added to your taxable income for the year, based on the distribution type, right? It could be Roth, so there's no taxes there. But in our client portal, also under maintenance, we have Form 1099-R instructions, and each scenario is listed there, right? So Roth conversion of pre-tax funds, Roth conversion of after-tax contribution, which would come into play during a mega backdoor Roth. And then distribution, whether it's or early, like before 59 and a half or after 59 and a half, instructions are there, and you'll fill that out accordingly and file it. And it should be done before the end of January. So we try and make it as simple as possible by allowing our clients to log into the portal and just follow those line by line instructions. But of course, we're here to help if you get stuck on something. You just have to reach out.
Okay, our next question is from Heath. How can I go from E-Trade to a self-directed retirement account?
Good question, Heath. Well, assuming it's a retirement account at E-Trade, then it would depend on what type of retirement account you set up, right? If you're self-employed and no employees, then it's probably going to be a solo 401k. Unless it's a Roth IRA, then it's the only option is a self-directed Roth IRA. If you're not self-employed or you have a business with employees, then you're probably going to do a self-directed IRA. And so it's a pretty straightforward process. Once the plan is set up and the checking account is open, you will initiate the transfer from the custodian, in this case E-Trade. If it's an IRA, it'll go to the new custodian. And then into the checking account for the IRA, the checkbook IRA. And then if it's a solo 401k, then you as the plan administrator will actually initiate that direct rollover request into the solo 401k. So it's pretty straightforward, and just kind of the theme here is that I've been sharing is inside of our client portal and during the setup period, we offer line by line instructions about how to execute this. And again, we are here to assist if somebody gets stuck on something. But Heath, that would be my answer to that.
Okay, this question is from Judy. Can I use the funding or self-directed IRA? Excuse me, can I use the funding of a self-directed IRA to invest into annuity, which I can draw the yearly RMD, or do I have to convert the self-directed IRA to a traditional IRA in order to do that?
Well, great question, Judy. Sure, nothing you said is not allowed. The annuity, of course, would have to be like set up correctly, right? If you have a checkbook IRA, for example, the annuity needs to be in the name of the IRA LLC and then set up properly. And yeah, you could take those annuity payments to satisfy an RMD. This is outside of the scope of what we do here at Sense Financial, but if you want to consult with the right annuity company or even a financial planner about this, then yeah, it's absolutely possible. I'm not 100% sure that you need a self-directed quote unquote account to do that. Probably makes more sense to just have a self-directed account over here to invest in alternative assets, and then an IRA annuity over here, two completely separate plans. And remember, when you go from IRA to IRA, as long as it's traditional to traditional, that's not a taxable event. It's just a transfer, right, from one provider to another, one custodian to another. So no taxes, no penalties. And so it probably makes more sense to have two separate plans to do that. And one IRA can satisfy the RMD for all IRAs. It just depends on the math and how much you have available to you. So it's absolutely possible.
Okay, our next question here is from David. Any upcoming changes?
Well, David, I saw your question, and I wish that you and I had a chance to talk ahead of time because, it kind of depends on what you're referencing, I suppose. But I will say this: the IRS has not released the 2026 401k contributions. No indication that IRA contributions are going to increase next year. I'm not saying they're not going to. None of this has been established yet. So no changes on that front. Next year, 2026 is what's called a restatement year for the solo 401ks. Not just ours, all solo 401ks everywhere by every provider, which means that the IRS is going to issue, basically they're going to issue an amendment that needs to be that's going to be applied to the existing solo 401k plans. And we take care of that here at Sense Financial. It's just part of the package. We don't charge anything extra. And so our clients next year will get new plan documents to review and sign after that restatement comes down. But as far as changes go, I know of nothing noteworthy to share here.
All right, a question from Danny. We currently have a self-directed account with your company. I have a trust account set up and a brokerage account, and I was curious about how we can handle the taxes with that.
Yeah, thanks, Danny. I believe you're a solo 401k client. And so I think what you're saying is that you have a solo 401k with us, which is a trust, and then you have this brokerage account set up at Fidelity or Schwab or somewhere like that, right? And you're investing in the stock market over there while simultaneously investing in alternative assets. And you're curious about how to handle the taxes with that. Well, again, this question lacks some nuance because I don't know if we're talking about you taking a distribution and how that's handled, or if we're talking about a Roth conversion, or if we're talking about The gains inside the brokerage account, well, let me just say this because I think you're probably talking about the latter of the three I offered. If there's gains in the brokerage account, first of all, if there's no taxes, it's a 401k plan. So it's either growing tax free if it's Roth or tax deferred if it's traditional inside that brokerage account investment. Even if there's gains, there's no taxes. So even if they issue you some kind of what's the right document? I forget what document it would be from that brokerage account indicating that there's uh, like phantom tax to be paid on the interest earned. There, you just keep that on file. There's nothing to file. There's no taxes. It's a 401k, and so I'm going to leave it at that because I think that's what you're asking about is that brokerage account. But if again, like I've told a few other people, if you're here and there's clarification, you can provide. Feel free to type it into the chat.
All right, this question is from Mario. Why does the solo 401k that is the administrator of the plan need a custodian company that charges a hefty yearly fee for doing basically nothing?
Well, Mario, thanks for the question. Um, the first of all, there is no custodian, as I indicated earlier. Obviously, you typed this question in before I answered the first question about the custodian, but there is no custodian. The solo 401ks have what's called a plan document provider, and that is the role that we provide here at Sense Financial, and every other company who offers a solo 401k plan is a plan document provider. They could also be a custodian. With our plans, as I mentioned earlier, there is no custodian. You're the plan administrator, and then we're the plan document provider. Now, I'm not sure, Mario, if you're one of our clients or if you are somewhere else. So I don't know the context of your hefty yearly fee for basically doing nothing. I'm not sure if that's in reference to our services or some other competitor of ours. As I mentioned earlier, our flat annual fee starting in year number 2 is $250 and nothing else, which I know is competitive and somewhat lower than some other providers. And but here's the easy way to think about it. If you have a solo 401k, you are leasing the plan documents from the plan document provider. And because of that, there's a fee involved. You pay a quote unquote a leasing fee for those plan documents to be maintained by the plan document provider in the sense of IRS updates. I just mentioned in 2026, the big every 4 year or so IRS update is coming down. It's called a restatement. We don't charge anything extra for that. Some of our competitors do, and we will amend the plans to effectively reflect those updates. You won't even necessarily know about it until you get the new documents to review and sign. Of course, we're here to answer questions, and then I'll just kind of list off the services that we provide real quick for the solo 401k plan. We actually provide unlimited client support, and this is going to be the probably most tangible benefit to our solo 401k clients and our IRA clients. If you have questions about anything, we're here to help, right? We want you to reach out to us before you do something, before you make a mistake or before you make an investment that you're kind of unsure about. We want to answer questions and make sure it gets done correctly. We can't undo something once it's done. So reach out to us ahead of time. And again, this could be in the form of, I'm going to make said investment. How do I do it? Can I do it? Here are the people involved. Okay, all of the above. It could be in the form of, I'm going to do a Roth conversion. How do I do that? It could be in the form of, I'm going to do distribution. Now, a lot of the questions we're answering in the Q&A here today are questions that we get on a regular basis outside of this live Q&A call that we are absolutely here to answer. So that would be kind of how I would answer the question if I'm doing a consultation and someone says, what do you do or what do I get for the $250 flat annual fee that starts in year number 2? The unlimited client support, the IRS amendments that come down every 4 years or so, and then I didn't mention this, we have to do annual reporting to the IRS as well as the plan document provider, basically telling the IRS that Mario, your plan and every other solo 401k plan is either in good standing and still active, or it's not. Sometimes people disappear, and we have to report to the IRS that the plan is not active anymore. And so those are things that we take care of as part of that flat $250. So there you go.
All right, a question here from Delise. She'd like more information on distributions, withdrawals, and about Fidelity investing through Sense.
I think we've talked about the distributions a little bit. I'll cover more of that. I'm not sure what you mean by distributions versus withdrawals. So, and then Fidelity investing through Sense. Okay, so let me make a general statement. Sense Financial doesn't hold any accounts or any money. You might have an account with us because you're our client. We don't call it that because it causes confusion. We don't hold anybody's money. We're not a bank. We're not a custodian. We're the plan document provider. And so, excuse me. So we provide the plan and you invest the money as you see fit. If Fidelity is where you want to put some or all of your money, then you're more than welcome to do that. With our plan, you can open up a non-custodial brokerage account at Fidelity and invest in what they offer, stocks, bonds, mutual funds, and ETFs. I think that's maybe what you mean by quote unquote through Sense. It's using our plan documents to open up that plan and have them be in the 401k. Just some of them are invested at Fidelity and some are not, or all at Fidelity. It's totally up to you. Distributions. Well, the 401k distributions for the solo 401k follow the same rules as any other 401k plan, any other retirement plan, right? 59 and a half. 73 is the age of RMDs right now. Roth versus traditional, same exact rules. If you take a distribution, as I mentioned, we have our 1099 instructions. And actually, we have a really good article in our knowledge base. I should mention this. We have a knowledge base in our client portal for the solo 401ks. And in the knowledge base, there's about 100 articles, give or take. And one of those articles is actually called Planning for, that's Planning for Contributions. I'm thinking about distributions. So it's Planning for Contributions. That's actually a really good article to plan for contributions. But when it comes to distributions, it's a little more straightforward, right? If you're taking RMDs, you'll have to figure that out and calculate what the RMD dollar amount is using a calculator, talking to your tax advisor. If you're talking about just a distribution, then you just take the distribution and fill out the 1099 accordingly, right? Whether it's Roth traditional or whether there's taxes owed or penalties owed is going to depend on the type of funds they are and your age. And so fill out the 1099 accordingly, turn it into your tax advisor, and have it reflected on your 1040. So hopefully that answers the questions.
All right, a question from David. How to invest self-directed IRA money into a money market account from another bank or financial institution, since Solera cannot offer that.
Yeah, great question. So unlike the solo 401k, the brokerages, the ones we've all heard of, right? Fidelity, Vanguard, Schwab, T. Rowe Price, Edward Jones, etc., will not open up a brokerage account for an IRA-owned LLC or IRA-owned trust. They will with the solo 401k. I'm not sure what changed. Something changed along the way. So to answer your question, as the manager of the LLC owned by the IRA, you can open an account wherever you would like. But that provider of said account has to cooperate with you, has to be willing to do it. And as I mentioned, those brokerages won't do it. You could walk into your local B of A or Wells Fargo and open up a money market account and invest, but in the name of the IRA LLC or IRA trust. So that way the funds stay inside that same plan, and then you could invest there. And yeah, Solera doesn't offer a money market. They have a higher interest bearing, but it's not much. It's like less than 1% or maybe 1%. And then what another alternative is, as I mentioned earlier, you can transfer money from one IRA to another. So this is probably the better way to do it, right? If you want to be in the market somehow, like let's say you want to be in the Vanguard money market account, then open up an IRA at Vanguard and then just perform a transfer from Solera as the custodian to Vanguard. And now you have money in Vanguard, right? They're two separate plans, two separate custodians. You can always liquidate and go back the other direction. These are not taxable or penalized, events. So all of that works. Um, you could also, there's a brokerage called Tasty Trade, which actually will let you open up an IRA owned trust or IRA owned LLC brokerage account. Tasty Trade, I actually personally have an account with them for my self-directed Roth IRA, and it's they're designed for more of a day trading type user interface, so it's not super easy to navigate, but I just move money in there, and I put some in like the S&P 500 as an example, just in between alternative asset investing. So that way I don't have to actually perform a transfer from one custodian to another custodian. I can just ACH the money from my Solera checking account to Tasty Trade, put it in the S&P 500, and then I can liquidate S&P 500 and ACH it back to Solera when I'm ready to do another alternative asset. So that's personally how I do it. It took a little bit of work to get that account opened with Tasty Trade, but they eventually it got open and it's set up. You won't have that success with any of the other brokerages. So those are your two options. A separate IRA somewhere else, transfer back and forth, or the like I said, the account at Tasty Trade. Or if you want to go and try and fight the battle of opening up a money market account at like a local bank of some sort, or even a Wells Fargo or whatever, then you're more than welcome to do that. Just make sure it's in the name of the IRA, LLC, or trust and its tax ID number and not you. That's crucial for it to be set up correctly. So you can let us know if you have any questions as you're kind of digging into that, and we can help as much as we can.
Okay, next question here is from David. Can I open up a solo 401k as a retiree?
Well, David, to have a solo 401k, you must have legitimate self-employment activity. So if you're truly retired and you're not working at all, not for yourself or anybody else, then the answer is no. If you are retired from a like a W-2 job you had for the last 50 years, and you are also now self-employed, and you have no full-time W-2 employees, as long as that income that you're earning from the self-employment is earned income and not passive income like rental income or investment income, then yeah, you can have a solo 401k plan. Not a problem.
Okay, next question here is from Deanna. Do I need a board resolution to appoint someone other than myself to handle banking? An example is paying bills.
Well, yeah, so you actually can have, Deanna, this is in relation to the solo 401k. There is a document called a board resolution in the plan, and that board resolution will name the co-trustees. And so, yes, the answer is yes to your question. You do have to have a board resolution. But if you're one of our clients and you want to add a co-trustee, then you just have to let us know, and we'll add the co-trustee and we'll amend the board resolution document to reflect that co-trustee, and now they can have essentially the same power that you have.
Okay, a question here from Robert. Correct wording to use when producing a note for a borrower of funds from my 401k, and the limits of what I can charge in fees or origination fees to the borrower using the note.
Well, Robert, let me say this delicately, but then I'll answer the question as best I can. We don't offer investment advice here at Sense Financial. That's out of our scope. We're not financial advisors and we're not attorneys or CPAs. That said, I don't know what the correct wording would be. That's not something I'm going to be able to answer. The limits of what you can charge in fees, I would suggest that generally speaking, there are no limits. However, you may have some usury law in your state that you need to be aware of, and that will cap the amount of interest or points that you can charge to a borrower using the note. Again, both of these questions are out of the scope of what we do here at Sense Financial. I would connect with an attorney or even possibly a local title or escrow office that can help you out with this.
Okay, next question's from David. I'm 70 years old, and this year, the 2025 tax year, with a temporary increased deduction, I would like to take a relatively small withdrawal from my solo 401k. It is my understanding that a Form 99R is required to be sent to the IRS. How is the best way to have that form generated and filed with the IRS? I think this needs to be done before the end of January 2026.
Yeah, great question. And we answered some of this already. Um, the temporary increased deduction. Temporary increased deduction. Are you talking about contribution? I don't know. Maybe there's something there I'm not familiar with, or just the wording is throwing me off. But um, I mean, you can take a withdrawal. You're over 59 and a half. I wouldn't call it a withdrawal. I would call it a distribution because it has to be done properly. But yeah, the 1099 would need to be filled out and sent to the IRS. Uh, I don't think, David, that you're a client of ours, but in our client portal, we have a link to the fillable 1099s that you can fill out. But you can also go to the IRS website and grab one of those yourself and then file it with the IRS. And then, yeah, it needs to be done before the end of January. And that's essentially it. Just work with your tax advisor before you take the distribution so you know kind of what you're getting yourself into. Um, I'm trying to think, okay, if I am 70 years old this year, 2025, with the temporary increased deduction, I would like to take a relatively. Oh, or you're talking about the standard deduction? Probably. Okay. So yeah, actually that's going to go up if I understand correctly in 2026. The standard deduction is going to go up from 30, oh, don't quote me on this. Again, I'm not a tax advisor. 31,000 married filing jointly. 31,250 to 32,200, I believe, is what it's going up to married filing jointly. And then I think you can just divide that in two if you're single filing or married filing separately. But yeah, I think that's what you're talking about. So work with your tax advisor. That's my advice.
Okay, next question is from Kenneth. Give examples of private lending for self-directed accounts.
Well, Kenneth, there's no limit to this other than being aware of who the borrowers are, because they can't be a disqualified party to your plan, you and your immediate family. Outside of that, you can private loan, you can loan money to whoever you would like. So most of our clients are doing this with real estate in some way, shape, or form. Typically, it's a private loan to somebody who's doing fix and flips, and the 401k or IRA is getting a return for that, or it's a that's probably the most common example. Um, you could loan to a business. We have some clients that do that as well. I would suggest, if you, no matter what type of loan that you do, make sure that it's a secured loan, not an unsecured loan. And I would have it secured by something tangible. That's why real estate is so easy, because it's tangible. But if it's not a real estate loan, if it's like a business loan, you could still secure it with real estate or office equipment or cars or machinery of some sort. I just don't recommend doing an unsecured loan, because then if there's a default, you really have no recourse. Your 401k or IRA has no recourse. You're kind of just left with the loss in principal investment, unless the person wants to pay you back. You can try and go after them, but they may be they may just not have any money to pay you back regardless. So yeah, that's probably the best way I can answer that question, outside of you kind of telling me what your thoughts are.
Right, a question from Bill. Is future option to convert solo 401k in event company has added employees. Example, company children start working. What are limitations for annual employee pay? $0, or is there a threshold?
Well, your first of all, if you can't qualify for a solo 401k plan and have full-time W-2 employees. There's some exceptions to this. Under 21 years of old, under 21 years of age, excuse me. I say that because you brought up company children start working. Now, I'm not 100% sure what you mean by company children and start working, but if they're under 21 and they work for the company that sponsored the solo 401k or any other company you have, then that's fine. 1099 is okay, independent contractor. And then there's the employees need to basically work less than 500 hours a year. So that might impact what they're paid. If they work less than 500 hours a year and they're W 2 employees over 21 years of age, then you can still have a solo 401k plan. Once they get over 500 hours, then you don't the plan is technically not valid anymore. It doesn't become a distribution and cause a bunch of taxes. It's just not the company that sponsored it is no longer qualified to sponsor it. So you have a choice to make. You would either roll it into a self-directed IRA or a regular IRA, not self-directed for alternative asset investing, or you would start a group 401k type plan for you and the employees you have, and then that money can be put into that, rolled into that 401k plan. So those are essentially your options, and you probably should figure that out sooner than later. The IRS is pretty flexible about it, but if you don't qualify for the solo 401k, you can't make any contributions. You can still manage the money that's in there for a short period of time before doing something with the plan and the funds, but you cannot continue to make contributions if the plan is no longer sponsored by a company that can actually sponsor it. And by the way, this conversation typically has to do with any company you own that has employees, right? If you own any company with full-time employees, none of your companies can have a solo 401k plan, even if you have one without employees and one with employees. All right, so it's based on the person, not the plan, or not the company. Okay, so if the person, the individual, has any employees, period, company A, company B, company C, doesn't matter, then they typically don't qualify for a solo 401k. There's some nuance to this, so we should potentially talk offline if this fits anybody here. But that's the kind of straightforward answer. And then annual pay, that's irrelevant. So
Okay, a question from Joseph. I'm completing a solar project and will have a sizable tax credit. Current thought is to convert Solo 401k to Roth IRA and take advantage of the tax credit and shield future earnings. I also had questions if you're familiar with decentralized masters crypto in native markets and if Solo 401k structures can accommodate that type of investment strategy.
yeah, good stuff, Joseph. Lots of you put some thought behind these questions here for sure. I love that you're thinking about doing the Roth conversion. I don't think you necessarily need to go from 401k to IRA unless you're no longer going to have the 401k for some reason, because remember, the solo 401k has Roth and traditional built into the same plan, so can stay there. Perhaps that's what you mean. Nevertheless, yeah, your losses that you report or tax credits can offset that income being added for the Roth conversion. Work with your tax advisor on that. Not a problem. And then questions about decentralized math. Yeah. Well, first of all, I'm not an expert in crypto by any stretch, but there's nothing about this that's not allowed. I mean, you have the Solo 401k. It can invest in anything except for collectibles and an investment involving a disqualified party. So having a decentralized master's crypto, yeah, I mean, it's decentralized, so it's somewhere local. That's fine. It's native. I assume you mean native to the actual coin. I'm not sure. But yeah, it can do that. I don't have a whole lot else to add to this. It's certainly something you can do. Just again, like all investments for your solo 401k or checkbook IRA, just make sure they're done in the name of the plan and its tax ID number and not you personally. And this is all fine. I don't think I don't. I'm not hearing anything in this question about crypto mining or some other method that might trigger UBIT tax. So yeah, that's fine. That's all I got on that. Hope that's helpful, Joseph.
Okay, next question's from Cheryl. Do you have information on selling a house that is held in a SEP IRA?
Well, we don't do SEPs here, Cheryl, so I'm not take that for what it's worth. That said, my understanding is that they operate, as far as especially a question like this, the same as any other IRA. So I don't know what you mean by do I have information on selling a house that's in the IRA? I guess I'll say just make sure the money goes back into the plan and not to you personally, unless you want to take some kind of distribution. If there's a loan on it, you're going to pay capital gains tax on the profit in the form of a UBIT tax, UBIT tax, and an IRA. Outside of that, I don't have a whole lot to add on that. If it's just a regular check, that's the same answer, whether it's a traditional IRA, Roth IRA, or SEP IRA. It's the same thing.
Right, this question is from Scott. If I put the business that is linked to my solo 401k on hold, I don't have any income or expenses, what do I need to do to maintain my solo 401k?
Well, don't have any income or expenses. Yeah, that's probably something we should talk about offline, Scott, but it depends on how long this quote unquote hold is going to be. You know, there's no like there's no clear answer from the IRS on this. I've heard some tax advisors say you have up to 3 years to kind of figure this out. I've heard others say you should probably, you know, if you're not self-employed anymore, then you're not self-employed anymore, and you should probably do something with the plan. Like I said earlier, roll it into a self-directed IRA, another 401k, as a couple of options. But but yeah, my feeling is you probably have some time to kind of freeze the plan, so to speak, if the business is on hold. But here's the other nuance to this. Again, it depends on what you mean by on hold. The IRS expects businesses to have up years and down years and everything in between. Now, you said here no income and no expenses. So that to me means that you're not even trying to make money. So I guess that's what you mean by on hold. So are you really self employed anymore? You could probably get away with that for a little while, but at some point you probably need to use one of the methods that I mentioned. Go to an IRA or 401k.
Right, question from Bobby. How can an investor learn if a brokerage invests in nonprofit or companies that support political activism?
I have no idea. I'm sorry, Bobby. I don't know.
And another question from Bobby. Also, what organizations outside of the larger brokerages carry the self-directed retirement accounts?
Well, larger brokerages do not carry truly self-directed retirement accounts. Excuse me. So, so I wouldn't even say ask the question the way you asked it because it's not relevant. The the Vanguards of the world, Edward Jones, your financial planner, they would rely on a provider like us to set up a truly self-directed account. If one of those companies is calling an IRA a self-directed quote unquote account, they're just meaning that you can pick whatever stocks, bonds, mutual funds, or ETFs that they offer. But it's not truly self-directed because you have no access to alternative assets. And I mean, you could go on Google and search self-directed retirement plan providers, and you'll find some. But no one is as good as us, Bobby, honestly. And I'm not biased at all with that. So
All right, those were all the pre-submitted questions. I know we're coming up to the end of our hour here, so we will answer as many questions as we can from the live chat stream. But we do have a question from Joe. Can you make a loan to other business entities?
sure. Not a problem at all. Again, just not S corp.
Okay, a question from
Let me
Mohammed.
rephrase that. I'm so sorry.
Go
Uh,
ahead.
yeah, you can loan to somebody who files taxes as an S corp, but the 401k cannot be um, like a owner of an S corp. Is what I was trying to say. So, thank you.
Okay, from Mohammed, how much loan can you take from the solo 401k?
Up to 50,000 or 50% of the total plan assets, whichever is less, and you cannot exceed those amounts based on the highest balance over the last 12 months. So simple math, if I borrowed $50,000 today and I paid off $10,000 tomorrow on November 4th of 2020, November 5th of 2026, I could borrow another $10,000. So it's based on the highest balance over the last 12 months.
Okay, this question is from Arik. If the salary deferral and profit sharing contributions are converted to Roth via in plan conversion, what is the maximum annual dollar amount that can be put into the plan for the tax year? Is there a dollar limit?
Yeah, 70,000 if you're under 50, 77,500 if you're over 50.
Okay, next question is from Kristen. What age do you have to start taking money out, and how does that work, or do you document that?
Well, it's 73 is the RMD age right now. That'll probably change as time goes on, but right now it's 73. And then you can take distributions from the plans once you're 59 and a half without penalty. Whether it's taxable or not is going to depend on Roth, traditional, that sort of thing.
Okay, this one is from David. Is it possible to transfer with you guys the full value of a solo 401k to a self-directed IRA? This would be simply the RMD, since my understanding RMDs from the solo 401k and IRAs would have to be calculated separately.
Yeah, they are. That's correct. So yeah, I mean, you could transfer from a solo 401k to an IRA anytime you'd like. I believe the dollar amounts would still be the same because it's based on the values of the plans. So I'm not, yeah, they're calculated separately, but still you could add them up together and, well, actually, that's not true. Excuse me, because it's percentage based, right? So um, trying to think of why that would be an advantage. But the answer is yes. You can, if you figure out why that would be easier for you, then yes, you can go from solo 401k to self-directed IRA. If you have Roth and traditional in the solo 401k, then you're talking about two separate self-directed IRAs. One is Roth and one is traditional. So that would be the only thing I'd add there.
Okay, from Gloria, discount solo 401k, set up my solo 401k with checkbook control, and I have no idea what you and your service will provide for me. Can you explain?
Looks like that question came in towards the beginning of this call, so I'm going to assume, Gloria, that a lot of your questions were already answered, but our team can reach out to you offline and schedule a call with you. And for everybody else, Discount Solo 401k, we acquired clients from them, so that's where Gloria is coming from.
Righty. Next question. Give me one moment here. Okay, from Lynn. What do I need for
What do I
what do
need
I
to
need to
submit
submit
to my
to my
CPA?
CPA? Yeah. I just set up Roth Solo 401k with Sense and Solera.
Oh, well, Lynn, welcome to our company. Thank you so much. We appreciate the opportunity to serve you. Um, what do you need to submit to your CPA? I just set up my solo 401k. Well, uh, first of all, solo 401ks have Roth and traditional, so it's not a Roth solo 401k. It's just a solo 401k, just so we're talking the same language here. And Lynn, I would just talk to your CPA about that you set up a solo 401k and then have them advise you from there. When you make contributions, you're going to tell them about those contributions so that they can be reported properly on your taxes.
A question from Gloria, is the 5500 easy done once or is it done yearly?
Yearly.
Okay, question from Bobby. Not sure if we answered this earlier, but what services come with holding 401k with Sense? Are there investment options included, like at the brokerage?
Uh,
If using check book to make investments, then there can be confusion about the taxable interest at 1099 time at the end of the year.
all right. Well, yeah, I feel like we covered that. Was that one of the pre-submitted
Mhm.
questions? There are no taxes
Possibly, yeah.
in that scenario, not from what I heard. Um, and yeah, let's assume that we answered that the rest of it because we're running
Okay.
short on time, and I
Can
think
we
we did
squeeze in
well.
one more question?
Yeah, let's do one more, and then everybody who submitted a question, I'll personally I'll circle back around and I'll shoot a note to you with the answer to your question, assuming I have your contact info.
Okay. Some of these are repeat questions.
Eric, we do not provide defined benefit plans. You would have to go to your your financial planner for something like that. But you could have a solo 401k, a self-directed IRA, and a defined benefit plan all at the same time.
All right.
Oh,
There are.
David,
Go ahead.
sorry, quick question, quick answer. David, clients.sensefinancial.com. What is the link for the client portal?
Perfect.
Go ahead, Mina.
Okay,
Sorry.
yeah.
I mean, Natalie.
Yeah, no, no worries. Our hour is up, so I know there are still a handful of questions that we were not able to get to in the chat. So please email us or give us a call. We'd be able to schedule a call with Brett so he can answer that question one-on-one. But we do have another Q&A session coming up in 2 weeks. It's on Monday, November 17th. We do look forward to you joining us and answering these questions at that time. Again, in the meantime, feel free to reach out to us and hope you all have a wonderful day.
Thank you, everybody.
Okay, thank you. Bye.
Thanks, Natalie.